Are we all in agreement that maybe this is in the rearview mirror and now we're back to global growth concerns? Sam?
Well, I guess I'll just start by saying, yeah, we went 20% to the upside since December 24th. I think it's pretty natural for us to attempt to digest things. I think economically, we're going from a Goldilocks scenario to a mama bear scenario because things are getting softer and colder. But I don't think we're headed for a recession.
Just zeroing in on my question, we're getting a 3-point bounce. So does that mean that the markets had already factored in that nothing was going to happen with Mueller, or it was never going to be an issue in the first place? You remember there was a time when I think it was Brian Ross, where was he? ABC. He came out with it was false news actually, that there had been a meeting before the election with Russia, and then he had to take it back. The market sold off like 500 points when that happened. There were concerns at one point about a constitutional crisis. Were those concerns put away long ago?
I believe so. It's almost like a ping pong ball dropping on a table. The first bounce is the greatest, and then every other one gets a bit more
like
muted.
Like a cat that you slap, cat gets desensitized after the first time. It's like, whoa! And then sooner or later, it'll just sleep right through your claps, I think, right?
Well, I like cats, but I love dogs. So.
Yeah,
we'll stick with
I'm going to go with that too. I'm going to be Arthur Brooks. I love all things, but I guess I like dogs like logarithmically more than cats. But that's just me. Ed, rearview mirror for this and on to global growth.
Yeah, I think so. I think markets are going to be much more focused this week on issues like Brexit, where the drama is going to reach a fever pitch. This week, trade talks in Beijing, and the global slowdown and the slight inversion of the U.S. yield curve. But I think it does remove some potential risks. I mean, it's highly unlikely that we're going to be talking about impeachment proceedings, and that had the potential to sap market sentiment.
They're split on that now. The Dems. I saw a big Bloomberg report that it's a real quandary for them to continue to pursue impeachment or to not, because they still don't like him. So, I don't really know if this puts it to bed.
And then I think a bigger issue that, had there been a smoking gun, right, the conversation that we would have been having this morning would be more about the potential for a Democratic sweep in 2020.
But I wonder about what the markets, whether that would have been whether it was an asymmetric risk, and if they had found collusion, if the markets would be down a lot. I don't know, or maybe they'd be up a lot if you think they'd be better with.
Well, the things that we'd be talking about this morning would be the potential for a sweep in 2020, and the implications of market unfriendly policies.
What are we talking about 2020 now?
No, we're not talking about it now.
Well, we probably should, because at this point, what's Congress going to get done between now and 2020?
I say next to nothing.
Okay, so then we need to talk about what happens in 2020 to see whether Republicans would have take it back, whether they would have lose the Senate, whether Trump is
right. But I just think there's the markets are going to wait on that.
So it's not going to have anything to do with Washington.
Yeah, no, I think again it's about this week. It's about Brexit. It's about trade talks in Beijing.
There could be more,
and it's about the global
for more tax cuts now.
So I mean, even
you can't get them with
through
the
Congress.
House.
So good luck with that.
So it was big news last week that the Fed wasn't going to wasn't going to raise interest rates anytime this year. But now money markets are pricing in a 90% probability that we're going to get a cut before the year is up.
Did they say, I was watching Gonzaga, I think, when that happened, I guess. I think I must have missed a lot of...
the landscape has changed a lot.
When did this Trump thing hit? Was that...
Friday.
That was Friday, okay. Well, weren't there
Well, we didn't actually see anything until Sunday, so it was just speculation Friday and Saturday.
I think David wants to get a word in.
And I think... Weren't there 16 games on Friday? I mean,
there were a lot of games. I was in the office. You've got the best hours for watching March Madness, Joe. So what I would say is, we're talking about 2020. We're talking about a slowdown in global growth. We're talking about continued political uncertainty. And I think, Joe, the answer to your question about 2020 is really dependent on whether or not the economy is in a recession at that point in time. And more importantly, focusing on some of the near-term data, right? The consumer looks fine. Labor markets are tightening. Consumption looks relatively solid. Inflation is coming down. That is a good environment for the core of the U.S. economy. Where the softness continues to percolate is really on the manufacturing side, the business side. And we know that the lack of CapEx has been driven by this uncertainty, which has been created by Brexit, by politics here in the U.S., by what's going on in Europe. And so, I think we need to look, kind of 6 or 9 steps forward and think about what are the implications of this for the economy, because from where we sit, the economy is really going to drive that outcome in 2020.
So does anyone have a deal in year-end targets or not for the S&P to you?
So, I mean, I think year-end targets are kind of a losing battle. The way that I think about it is the S&P 500 looks like it should be able to generate somewhere around $170 worth of earnings this year. Markets seem comfortable with a multiple somewhere around 16.5 times. Maybe there's a little bit of headroom on that now that the Fed has come out and said that they're going to pause for the year. But you multiply those two together, you get somewhere 2,900 on the S&P as fair value. I think we could overshoot that given what the Fed came out and said last week. But I think when all is said and done at the end of the year, we're probably sitting somewhere around where we are today.
Wild, man.
Frankly.
So 2,800 might be reasonable. Where did the S&P close? Oh, 2,800. Anyway, thanks for that. Ed, how about you?
Well, I mean, yeah, we've already reached our full year targets.
Really, what's your full year target? 2,400?
I mean, we don't publish official targets.
I wouldn't either. If it was 20.
But we were calling
for a bread basket?
We were calling for 10 to 15% returns this year.
From where?
And we're already there.
Okay.
For the calendar year.
So you don't think we make any more headway?
We've been pulling back on our overweights in risky
so you're
assets.
Getting negative then.
I think we're going to go through a consolidation.
Could we end lower than this at the end of the year?
No, we could end higher, but I think we need to.
We could end higher or lower.
No,
okay, thanks.
I think we could end higher.
Okay, we could end higher.
Yes.
Okay, good.